How to read a candlestick chart more simple and accurate for those who plunge into the world of trading, surely no stranger to charts or graphs that present price information. Regardless of the trading platform used, price movements will appear in the form of up and down charts. The historical data becomes a medium for conducting technical analysis. There are various types of charts that traders often rely on. Each has its own characteristics and advantages. One of the trader's favorite charts is the candlestick. Candlesticks are known for their shape that resembles a candlestick. This media is commonly used to analyze the movement of stocks, forex, to commodities. However, it is not uncommon for traders to get entangled with complex patterns when trying to read them. In fact, there is a simpler and more accurate way to read candlesticks. Get to know candlestick charts before learning how to read a candlestick. You must first identify its characteristics. Anatomy resembling a candlestick is not without meaning, but rather an image of the important elements in the stock. You can pay attention to the image below. The picture ABO phase shows the dynamics of the open high-low close OHLC within 1 week. The line above the candlestick represents the highest price high and is called the upper shadow. Conversely, the line below the candlestick represents the lowest price low, so it is called the lower shadow. The body or candlestick is the embodiment of the opening price and closing price. If the candle is red, it means that the closing price is lower than the opening price. However, if the candle is green, then the closing price is higher than the opening price. History of candlestick chart Munhisa Hanma is the figure behind the existence of candlestick. This Japanese man was a rice commodity trader in the 18th century. Every day, he records the movement of rice prices on parchment of rice. Gradually, he discovered a repeating pattern of the price blocks he drew. Hanma often writes about the laws of trading. The method he developed evolved into the candlestick chart that is known today. Candlestick famous to the Western world thanks to the role of Steve Nissen. He discovered this method when he met a Japanese broker, in 1987. Not long after, he wrote a book called Japanese Candlestick Charting Techniques. The work is widely known throughout the world. Advantages of candlestick charts. What are the advantages of this candlestick chart? Visual candlestick looks impressive, so it is comfortable to look at. This makes people more comfortable analyzing his movements. Candlesticks not only show fluctuations in stock prices, but also provide signals regarding future price changes. Basically, how to read candlesticks is quite easy. You don't have to learn dozens of patterns, just recognize the elements. Candlesticks are able to clearly display market psychology. That is, traders can identify which party dominates, whether buyers or sellers. This can be observed through the size of the body and shadow. 8 Candlestick trading strategies. Candlesticks are born as a result of an up and down price movement. Although at first glance it looks like random price movements, in reality these price movements form patterns that traders can use to achieve their trading goals. In general, the trend signals for the price movement of trading assets in the market are divided into 2. The bullish trend, which indicates that the price trend tends to rise, and the bearish, which indicates the downward trend of the price. However, reading the price trend in the market can To just rely on the bullish and bearish movement patterns, friend traders also need to understand the candlestick trading strategy.